As Tesla continues to become a household name, a lot of people are still questioning Tesla's high valuation and compare Tesla with the legacy OEMs like Ford and GM. I believe Tesla is more of a tech company in the hardware space and has a gross margin of a tech company. So therefore, it's valued like a tech company. So today in this video, we're going to talk about why Tesla is a unique investment opportunity and why Tesla isn't anything like the legacy OEMs. Hey, what is up, you guys? Welcome back to the channel. My name is Imon here at Money Host, where I talk about personal finance, investing in the stock market, credit cards, and Tesla. I personally believe Tesla is a unique company with a lot of optionalities on the table. You see, the fact is the auto industry is a $2.5 trillion market, and Tesla is one of the very few leaders in this space. If you think about it, Tesla has outsized demand for their products. For Q1, Tesla delivered over 310,000 vehicles. That was a 67% growth. Then for Q2, Tesla delivered 254,695 cars, which was a 27% growth. However, it seems like a deceleration when you compare it to the 67%. The Giga Shanghai was closed for almost 2 full months due to China's lockdown. The factory couldn't operate and produce cars. Therefore, 27% increase in Q2, still amazing given the circumstances. Despite significant challenges in April and May, Tesla managed to restart production at full capacity. So I believe the production will continue to ramp up during the second half of 2022. Especially with the 2 new factories up and running, Giga Austin and Giga Berlin, I think Tesla would be able to meet their 2022 goal of 50% delivery growth rate. During the Q2 earnings call, Tesla CFO mentioned, still pushing to reach 50% growth this year. The target has become more difficult, but remains possible with strong execution and no force major events for the rest of the year. That was a reaffirmation by the Tesla CFO that Tesla is still on track to meet 50% growth rate for 2022, which means they're expecting a massive increase in production for remaining of the year. You see, demand for Tesla vehicles remains elevated and the demand continues to grow despite the fact that Tesla vehicles are now more expensive. And due to high interest rate, it's now more expensive to take out a loan to buy a car. Tesla still has a 6 to 8 months of wait time when you order a vehicle. So it's clear the demand for Tesla products outpaces their ability to produce these vehicles. And by now, I'm sure you're probably thinking, oh, competition is coming. Yes, competition has been coming for the last 8 years. GM is one of the leading automakers in the US by volume. Even President Biden went to test drive the GM-made Hummer EV pickup truck. In 2017, GM made a big declaration to move into 100% electric cars and eventually completely phase out the gas-powered vehicles by 2035, which is just a couple of years down the road, probably about, 12, 13 years away now? And here's a quote from the GM CEO, Mary Barra. We started to say, okay, we don't want to be disrupted. We want to lead the transformation. So it seems like GM doesn't want to be disrupted by Tesla and they want to lead the EV transformation. How's that transformation going? Well, to answer that question, GM sold just over 7,000 EVs in 2022 so far. With 7,000 vehicles sold so far in 2022, doesn't seem like they're leading the transformation. They are far, far behind, not even close to catching up. So here's an example. Back in 2016, GM introduced their Chevy Volt. Despite being in the market for 7 years now and almost like a known product at this point, right? They only sold just about 7,000 vehicles in 2022. In comparison, Tesla introduced their Model Y back in January 2020. By end of December 2021, Tesla sold over 500,000 Model Ys within the first 2 years of being in production. You see, the demand for Tesla Model Y is growing exponentially. So Tesla was forced to configure Giga Austin and Giga Berlin exclusively just to produce Model Y until they can catch up with their order backlog. That's such a huge gap between Tesla and its competitor like GM. And in terms of producing and manufacturing these vehicles, most of the time, companies like GM and Ford would order the parts from suppliers, mostly international suppliers. So they will design the car, probably produce the engine, and bring all the parts together and assemble the car together, putting a GM logo on it and calling it American made. Obviously, these suppliers are producing the parts and selling to GM and Ford for profits, right? Whereas Tesla is a vertically integrated company. They design and produce most of the parts themselves in-house, including the batteries. So that's basically like almost 15 to 20 different companies under one umbrella. You see, Ford and GM are over 100-year-old legacy OEMs with a lot of baggage. Whereas Tesla is a young tech-savvy automaker with a lot of great new products coming up in the pipeline, like the Cybertruck, Tesla Semi, Roadster, the robotaxis, and others. In terms of financial, during the Q2 call, Tesla reported 27.9% gross auto margin. That was lower than expected due to the Shanghai shutdown. Basically had the idle capacity of the factory than the factory restart cost. And as of June quarter, Tesla has over $18.9 billion in cash and cash equivalent. That's a healthy amount of cash in the bank. with just over $7 billion in total debt. In comparison, GM has little over $21 billion in cash and cash equivalent, which is great, but GM also has almost $111 billion in total debt. And lastly, if you look at the big picture, Tesla is more than an auto company. Tesla has other businesses like the energy storage, Tesla's solar business, and their insurance business is growing exponentially. Then the software, the FSD business. Self-driving cars will be the future of transportation, and Tesla has millions of paid FSD customers. As Tesla continues to solve the full self-driving capabilities, which will probably take another couple of years, but it will be a massive source of revenue for Tesla. Then the Tesla bot, the Optimus Prime, to me, which is more like a moonshot dream. But I do think it has great potentials. Everyone wants to automate everything. I can definitely see the Optimus Prime, the human-sized bot, being used at a lot of businesses like the retail stores, coffee shops, factories. No other automakers has this many optionalities on the table. That's what makes a Tesla a unique investment opportunity. So I really believe it is a mistake to compare Tesla with the legacy OEM and their valuation get compared to the legacy OEMs like Ford and GM. So I really hope you like the content. If you did, please feel free to smash the like button for the YouTube algorithm, and don't forget to subscribe to the channel. Thank you for watching, and I'll see you on the next one.